Yeah, but you've got to tame that beast. The FOMO beast is the most dangerous beast of all, because that's when you do all the stupid shit. Because your friend's making money, you become desperate to make the 100x, and then you start listening to your friend's trade recommendations and you get into them too. Yeah. So FOMO is really one of the beasts you need to tame. Trust me, I've been in this industry since 2013. Every time prices go down, they single you out and blame you as if you have done it.
In this interview with Millionaire and Raoul, we explore R's bold prediction that the crypto market will reach a $100 trillion valuation by 2030, the transformative impact of AI and AGI on the global economy and the future of work, and the rise of meme coins and social tokens as new asset classes in the crypto ecosystem. Bitcoin is currently trading at $96,000, with recent market changes highlighting increased volatility. Don't forget to like, subscribe, and hit the notification bell to stay updated with the latest in crypto and blockchain technology.
It's like everybody's hopes and dreams are in that banana. If everyone's latched onto this is, okay, this is the time to make all the money. And then so the hopes and dreams are in it, when the reverse happens, you've shattered their illusions. It's scary. You have to take it really, really seriously. Coin is all about attention. Solana's got utility, you're building stuff on top of it. Yeah. A meme coin is attention. And we saw this with NFT communities. When people walk away, the attention disappears. Everyone's like, well, what happened to my utility? I was supposed to be doing this and you were going to be building clubhouses. And then they found out it was no. This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is as token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing, how everybody can get involved, whichever country you're in, however much you earn, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different companies or projects selling block space. That's all they do, which is a data storage and essentially that block or distributed ledger. And they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debts, this is driven by everything I call the everything codes and work that I did showing that every 4 years governments need to refinance their debts. And what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle. And it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycles. And then we go into macro fall or autumn, crypto.
As discussed by Raoul, let's dive into the potential for the crypto market to reach a $100 trillion valuation by 2030. Explore how AI and AGI could transform economies and redefine human work, and examine the significance of meme coins and social tokens in creating new forms of community and value. Now let's hear more from Raoul.
The beginning of the year, we go into the next, the fall or the autumn cycle. That's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything depends on global liquidity. Normally it lasts until about November because of this cycle. it lasts until November, and we have different structures of these cycles. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021, and then it ripped, but it didn't really extend, and everyone kind of got caught out by it was double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle, but thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. So that will be much higher price than everyone expects. Most people have PTSD from the last cycle. And they don't want to overextend themselves, and they're worried that they're going to be caught holding the bag, which usually means they'll sell early because the markets give as much pain to the most number of people as possible. Why in 2021, everyone's expecting to. One of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive, right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. So I think it's still to come, but the VC markets had no exits outside of tokens. There's been no equity exits in any project. We need Circle to go public or get bought. We need some of the, Kraken, we need some of these bigger things to recycle the VC money to then ratchet the whole space up again. And then, as you say, if we've captured a certain amount of liquidity, yes, it's increasing, but then you've sucked a whole bunch into the casino of meme coins, it takes some of that away. Because this entire industry trades on attention. And there's only so many of us in the industry. So let's say there's 1 million active people in the industry. Well, that's 1 million people's attention. And you've got 10,000 tokens launching a day. How much attention can we give to anything? So it really is this game of attention, and memes have got it now because everyone believes that they can make the next 100x. And so utility stuff, layer 2s, nobody cares. It will come back because we'll have different investors coming to the space and looking for real value. It's just, I think, a nature of where we are. I think the next stage is a lot of the application stuff, the real world assets, the deep in, gaming utility, gaming, it's all to come. Yes, I do, because they're social identifiers. It shows you were early to the space, you've been around, you understand the space. It's an identifier, right? But that PFP business, it'll come back in various forms. NFTs as a technology you can use for everything. Ticketing, any contractual term, OTC derivatives, you name it. So they're going to get used a lot. And I think Punk 6529, who talks about this may be larger than the underlying tokens themselves. Yes, because everything we do as humans has contracts. And this is, NFT is a contract, essentially a smart contract. So there's that. But then what's really happening, the big move in NFTs is high-end art. So that's Xcopy and Beeple and Fidenza.
They've been getting liquidity again?
Yes.
Oh, wow.
Because as people make money, the richer people get, what do? They buy art.
So
art is a long-term store of value. So if you ask any, go and look at any rich person in Manhattan, go and find a big hedge fund manager, say, where did you invest once you made your money? They'll tell you two things, property and art.
Yeah.
It's always the same.
Okay.
And so we're seeing that market coming alive. There's super scarcities that all being taken on. 40-something Xcopy, who's like the most legendary OG, culturally relevant in the space. I own every single Beeple edition that's...
Oh, well, I had no idea.
I own a lot. And I've been buying all this year. That's my big trade, is I've been top slicing Solana profits that I've made and locking it into art as a 10, 15 year storage of wealth.
To watch the full interview, check out the link in the description. Raoul Pal shares invaluable insights into the future of crypto, the impact of AI on society, and the evolving digital asset landscape. We'd love to hear your thoughts on a couple of questions. Do you think the crypto market will hit $100 trillion by 2030? How do you envision AI reshaping our economies and job markets? Thank you for watching. If you enjoyed this video, please subscribe to our channel, like the video, and share it with your friends to stay updated on the latest trends in crypto and blockchain.